Good evening, class. My name is Reynat Valandium, and my partner's name is Picasso Dutta, and we are going to be talking about our project, which is for now titled SPY and Sector ETFs Pattern Recognition. Our academic advisor for this project is Dr. Kashana. So for our project, we are going to be studying the volatility and return graphs for 9 sector ETFs that compose the S&P 500 index. On the right is an image that shows the 9 different ETFs that compose the SPY. We want to identify patterns in the volatility and return graphs using 2 methods. The first method we will be using is k-means clustering, which is a method that Dr. Kashana used in one of his studies. And the second method will be momentum technical indicators. Today we will be talking about 3 of these: MACD, RSI, and ADX. The main question that we are trying to answer for our project is which of the 9 sector ETFs delegate the SPY volatility and returns the most. This will allow us to forecast the SPY more accurately while reducing the overall risk. So last week we finalized data cleaning, meaning that all our data is now ready for initial exploratory analysis. We used a simple for loop that estimated missing values in the datasets using interpolation. We performed some initial exploratory data analysis to get some insights into the data, and lastly we also started experimenting with some of the technical indicators. I will talk about some temporary results we obtained for MACD, and Picasso will talk about RSI and ADX. For next week we will calculate the returns of volatility in preparation for the clustering analysis, as well as more detailed explanations for the technical indicators that we will be covering today. The first technical indicator is MACD. It is helpful in that it's supposed to reveal changes in the strength or direction, momentum, or the duration of a trend in a stock's price. In our case, not a stock, but an ETF. On the right, you can see MACD performed on the XLF ETF. From the graph, you can pretty much conclude whether or not you should go long or short on an ETF. If the MACD signal crossed above the signal line, we go long on XLF and vice versa. Picasso will talk about the other 2 indicators now.
For our next part of data preparation, we'll be adding few more momentum indicators, RSI and ADX. Now, relative strength index, which measure both the speed and direction of trend, fluctuates between 0 to 100, where 30 and 70 are usually considered as oversold and overbought region. But as we're working with short-term data, we will rather keep these levels as 25 and 75, while still maintaining the 14 data points average while calculating the rolling mean in RSI. Similarly, for ADX, which measure only the momentum and not the direction, will be tested at a level of 30. Now, this level is usually considered as 25 and above. So here we're working on volatility and not prices, so we need corresponding volatility for these prices. For this, we have calculated the VAR on the closing price, and this VAR was then later fed to RSI, as RSI takes only 1 input. But for ADX, which takes 3 input, high, low, and close, we had to get the VAR for all these 3 price ranges. Now for the rolling mean of log return squared, while calculating, we took the average of 60 data points, which corresponds to 1 hour of 1 minute data. And the VAR on our closing price came out to be in the range of 0.08 to 0.23. Now here we're almost done with the data preparation part. So our next step will be sorting the data and feature selection. So once we're done, we will be ready to perform training our model using ANN.